Okay, it's Thursday, October 15th, 2018, and we're going to review some of the trades with the trade copier. We're going to go actually to the dollar yen. Dollar yen, we traded this breakout to the downside. So if you're following along with some of my videos, you are probably aware of a particular strategy that I use called a continuation breakout trade. It's one of the first strategies that I developed back in 2001, and it's very reliable. But in some situations, we need to scale out at different levels. So the continuation breakout trade would normally provide a 55 pip profit target on the dollar yen and on the euro dollar, pound dollar. Uh, we can sometimes earn 250 pips profit on the pound yen. We did that a few weeks back. We really haven't had any continuation breakout trades that are that, um, as far as when the setup develops, that reliable, because we're seeing a lot of volatility, a lot of choppy ranges developing throughout each session, the New York and or the London and New York session, and then we're getting news that's having an impact. The other day we traded off of, or last week we traded around the U.S. elections, and then this week we've got Brexit and a few other things going on. So when I sold the dollar yen here yesterday, that's when we got into the trade. It was bouncing around. It took a while, so I want you to get an idea of how many hours it takes for some of these trades. Sometimes the trades, I'll get into the trade and they'll hit their target and we get paid for being in that trade within maybe an hour to 3 hours. And then other times we've got to sit in these trades for about 12, 13, 14 hours. It really depends. So while the market's sort of changing their shift and their focus over to what's going on with Brexit and the UK and news coming out of that area, you're going to get more activity and traders sort of focusing on trading the pound dollar, pound crosses, things like that. And then this one is going to move relatively sideways and flat. Not a whole lot going on there. Again, this is the dollar yen. So I had two take profit levels. The first one was 113.21, and the final 55 pip take profit, that's the final profit target, 112.86. But you can see that 112.86 was below last week's low, which is going to create a bit of a problem, right? I definitely need to scale out if I'm going to short this. And it's about getting your expectations in line, right? In the beginning, when you get into a trade where you're thinking, well, it could, but you've got to be prepared for these possibilities. Still, we're in a relatively tight range. We haven't cleared last week's low, and there isn't a whole lot of participation here on this particular currency pair. However, the signal was perfect. It was just right. It was exactly what I needed at that time. So I'll go back to the signal candle. I'll open up the charts here. This was the actual signal candle right there. That's the candle that put me in the trade. Again, this was yesterday, and it took a few hours. We can count how many hours. Is like 12, 13, 14 hours here. I have to manage these trades as time passes. I don't set a take profit and then walk away. I don't do that. I manage each one of these trades. I execute the same trades that I do with the trade copier in my own personal account. So I want to make as much money. I know that the market, sometimes it'll turn, sometimes it'll create a situation where my expected take profit level isn't going to be reached, and I've got to be there to control it and to take profits. So as this is developing and it's moving down towards that 20, it took, again, many hours, not normal, but at the same time not abnormal for this type of trading environment on this currency pair, especially with everything taken into consideration, everything that's going on. So as it's moving through that first take profit level, 113.21, I was actively managing the trade, and I was aware that we're also approaching that major psychological level, 113.00. So it doesn't have to hit the 00 number on that support level on the number to bounce. Sometimes it can fall just short of it. I think it went as low as 9. So it went to 113.09. I'm aware that it could go to 9, 6, 7, 4, or something like that and then bounce and pull away. But the market, the way it was starting to turn and shift, I was aware that I needed to shift to a 30-minute chart. And what I do when I'm managing these trades, now I just changed the charts to a 30-minute time frame. So as price is approaching my take profit level, I'm hands-on, got my hands on the mouse, I'm watching it, I'm waiting for a push. Very often with some of these candles, you're going to get a little more activity at the end of that candle, meaning that if, for example, if it's a 1 hour chart, sometimes you get a little more activity the last few minutes of that 1 hour candle. Not always, but in certain situations. So I was aware that that would probably happen, but that it was going to take place on a 30-minute chart. So I switched to a 30-minute chart, watched and noticed and waited for the push on that 30-minute candle. This is a half-hour candle, right? So at 9:30, I believe, is when it pushed down, and I was able to squeeze a little more. So you can see my final profit target where I closed the trade was 113.11. So I was able to take more. I took another 10 pips instead of just looking at the first take profit level and setting it in my platform and then walking away, which I don't like doing. I know that there's opportunities like this where I can get and earn another 10 more pips or 20 more pips, depending on which direction you're trading it in. Sometimes you can get more out of the trade, and that's exactly what we did here. So we were able to earn approximately 30 pips on this trade to the downside, and I'm not trying to pick bottoms. I really don't like doing that, but very often I know that as a result of watching price and being aware of what could happen, I can sometimes pick bottoms. But again, that's not what I'm trying to do. Picking tops and bottoms, you can lose a lot of money by doing that. It's just that this is my take profit level. I'm aware of where support is, and the fact that we're hitting a major psychological level and we're still stuck in a relatively tight range and we haven't cleared last week's low. So taking into consideration everything that was going on there, I was also watching Japanese yen futures, watching dollar. Things were starting to slow down and turn. I could see the possibility of this one retracing and bouncing back up. So it was time to lock in profits there. Again, the 30-minute candle reverses and goes right back up. And I was anticipating that it would probably print a hammer candle on the 1-hour chart. So I'll switch to a 1-hour chart, and that's my hammer candle. That's where I got out of the trade. So I was done with that trade, 30 pips approximately on this one. The original target was 21, but again, I manage these trades and I'm hands-on. So when you use my trade copier, I'm going to do the same thing for you. I'm going to squeeze out as much as I possibly can. I'm not going to, change the trade plan and expect more from a trade beyond its take profit level. But this was not the final take profit level. This was relatively easy to achieve and to be aware of. This is just a first take profit level, and very often if it's going to go lower, it's going to take that one out. But I wasn't sure that it was going to hit the final target here at 112.86. There was a lot going on there and why it wouldn't or potentially not move down to that level. There was another trade earlier that I wanted to talk about. I think it was a pound dollar. The pound dollar earlier this week, it hit all targets, the breakout. This, again, continuation breakout trade. This one obviously worked. And the trade that I just showed you on the dollar yen, that was a continuation breakout trade. But the dynamics were a little different there with that one. This one obviously was going to have a lot more activity because this is the pound dollar. So right now I'm looking for a pullback after last night's report with Brexit. A few people had resigned. There's been talk of that all week long. We saw some of that as basically speculation until we get clarity that someone actually has resigned. Just the talk can create some choppy behavior. But once we get clarity and someone's actually confirmed, whatever it is that they're reporting on, then we're going to get a bigger move. And at this point, I do have a candle that's closed below that support, this week's support level. I'm waiting for a more significant pullback and then maybe another opportunity to sell this pair. And I will execute that with the trade copier as another continuation breakout trade. The other one that I'm looking for a possibility to trade is the euro dollar. This is the euro dollar. This is the 1-hour time frame. And at this point, I've been watching this one for most of the week. It's been a little choppy, a few small trades, and then it peaked a few hours back and created the high for the week. And there was a breakout here, but that was not confirmed. The indicators weren't giving me the confirmation that I need to take a trade like this to the upside and expect that the trend is going to continue higher, which in fact it did not. It just went sideways and then dipped even lower. So I stayed away from going long, and I've just basically waited for the most significant high for the week to settle in where I can confirm that high and then use that high as the measure for a continuation breakout trade, a signal candle. So I had it here a couple of hours ago, but I haven't gone long. I still don't have my entry. I use a 3-pip entry. If it doesn't go 3 pips higher than that signal candle, then I never go long. And if it goes back inside a consolidation, this is one of the methods that I put in place for this technique to keep me out of trouble, meaning that I avoid getting in these head fakes. I don't get in just because the candle closes and gives me a signal. I wait for the 3-pip entry. That keeps me out of trouble. If price holds right around this level and then goes back up through and then gives me the 3 pip entry, I would consider going long and trading it for possibly 55 pips. But in this instance, again, because I'm going opposite the direction of last week's trend, I would scale out, similar to what I did with the dollar yen. I would scale out. If it blows right through the first take profit target, then I would trade it to that final 55 pip take profit level, wherever that might be. So I don't have that set up yet because I'm not too sure that this is going to go back up. I'm going to keep watching it, and I will try to execute that trade with the trade copier. So far, no losing trades. We haven't had any losing trades in weeks, and the trade copier is really easy to use. I mean, you just log in, you add your trade copier, your trading account details. It only works on the MetaTrader 4 platform. It works with any broker, but it works on the MetaTrader 4 platform. You can use any lot sizing you want. You don't need to add more money to your trading account. You can use my trade copier with a $100 balance, a $50 balance, or a $100,000 balance. It's all up to you. When you get into the dashboard area of the trade copier, you connect your account. It takes less than 5 minutes, and then you specify and set up the lot sizing. So you can use micros, minis, standard lots, whatever it is that you want to do, any version variation of all of that. You also set up a maximum stop loss. So for those of you who are concerned about what size stop loss do I use, I never use a stop loss larger than 55 pips. I know that some people have posted on the internet that I use like a 150 pip stop loss. I don't know why they would say that. I've never used a 150 pip stop loss. I've never had to. I've always used, since I developed this method back in 2001, a 55 pip stop loss. And the way that I know that some of these people who are reporting that aren't really reporting accurately on my behalf, or maybe just sort of drawing attention somewhere else, because a lot of them have affiliate links to other trade copiers, so please be careful there. You go into the trade copier in the dashboard, and you just simply enter in maximum stop loss 55 pips, because you know that that's what I'm using. So there's your protection. You know you're never going to experience a loss that's larger than 55 pips. However, if a trade appears to start breaking down and it's not going to work and it doesn't look like it's going to hit that final target, I can always determine that. I can usually determine that it's not going to work, and I will cut the trade off early. I'm not changing the plan and I'm not changing the stop loss, but if there's been a mistake and I've miscalculated from the entry that it is one of my particular strategies, then there's no reason for me to let it run into that maximum stop loss. So I haven't had a 55 pip stop loss in over a year. I mean, it's been a long time. If I experience a loss, it's going to be like maybe 20, 27 pips, maybe 32 pips at the high. But I always use a 55 pip stop loss initially, but it doesn't mean I have to take the 55 pip hit on a loss if a trade doesn't work out. So I'm managing those trades just like I am when I was showing you the dollar yen. When the dollar yen was dropping back down, I was able to get more out of the trade because I was there hands on, paying attention, watching what price is doing, how the market's turning, if there's any news, things like that. Just the same, if there's a stop loss, or if there's a trade that's approaching the stop loss and it looks like it's going to fail, there's no reason to let it hit that, a big loss like that. There's no reason to take a hit like that. And I protect your capital by trading just like that. I'm hands on throughout the London and New York trading session. And some people ask if I trade around the news. So I can trade around the news, but I look for technical signals. So it doesn't require me to, my system doesn't require me to jump in the market the split second that the news is released. So there's a lot of safety. Sometimes we see pip spreads widen to just some astronomical number. It doesn't even make it cost effective to even try to trade the news with some brokers. And then there's also the placement, right? You don't know where you're going to get a fill sometimes. You don't need to worry about that. I'm not going to jump into a trade just because price is moving. I need a signal, a technical signal, and I need to know why it's moving, or I won't take the trade. And I always need to target, or I won't take the trade. So if you're considering using the trade copier, right now is a good time. I'm actually offering a buy one, get one free. So you pay, it's a monthly service. It's $199 right now per month. But if you purchase now, and there's I think the offer is going to expire in about 2 days from the time of this recording. So you could get an extra month for free. So you're going to get a total of 60 days. 60 weeks would be nice, right? 60 days for the price of one. And then after that, if you like it, I don't automatically rebill anybody's credit card. I always just send my clients, my subscribers, an email notification 5 days before their subscription is going to expire. and I remind them that it's going to expire. If they want, they can click the link and just sign up again. So I don't automatically charge your card. You can cancel anytime you like. Again, if you use it for 60 days and you like it, I give you a link and you can continue using the trade copier for $1.99. And you lock in that price. If I raise the price ever in the future, you won't experience any price hikes. You'll always get the price of $1.99. Thanks for watching. I hope you had a good trading week. It's been really interesting with Brexit. Be careful. I'm sure there's going to be a little more volatility with rumors, comments, things like that later on. But it's going to provide some really good opportunities for us to trade.